Song.
892, 8.92 billion to 9.21 billion. That's Charlie Victor Sandy.
Uptown got its hustlers, the Bowery got its bumps. 42nd Street got a big Jim, a walker here, bull shooting son of a gun. Yeah, he's big and dumb as a man can come, but stronger than a country hop.
All right, it's a little Billy Joel Radio. What up, what up? My name is Scott Redler, Chief Strategic Officer of T3 Live. It is 6:31. It is May 3rd. It is Fed Day. All eyes on the Fed and the statements. Anyway, read the disclosure. Let's get to it. So let me see if I could say hello to some of my dogs around the world. Lately, some of the stickiness in Twitter and YouTube is not letting me see who's dialed in and whether or not I'm even talking to myself. But we're going to keep going with this. I think I see myself. Little bad Leroy Brown, bad Powell, right? Some people think he's doing a great job. Some people he's doing a horrible job. Some people think the economy is going to fall off a cliff in the second half. Some people think we're going to have a soft landing. Some think a hard landing. Some think we're normalizing. Everyone's got opinions everywhere. And the short-term market definitely has its own opinions too. So what do we have to do? We have to be prepared, right? We have to be prepared with levels. We got to know what we're looking at. We got to know what we're trying to do here. It all depends. So I feel like ever since I turned 50 a few years ago, I've been, instead of just talking about short-term trades on how to make money, because that's what I do for a living to actually pay my bills. It's really to build wealth. It's about an asset allocation game. Okay, how do you take your money and that you make monthly and quarterly, and how do you allocate that to save for college, for retirement, for whatever it is you're looking to do? Whether it's paying down your mortgage monthly, paying it to a whole life insurance policy, paying it to a 401k, a 403b, a 529. So every month, at least money's going somewhere in building. But then if you trade for a living, you have to think about the short-term levels and what the market's looking at, what the narrative is, what everyone is hyper-focusing on. And right now, obviously, it's the regional banks that 3 have gone to 0. And we've done a pretty good job playing puts on them, but people are thinking about what the ramifications of that. And then a lot of people are thinking about what are the ramifications of, 9 rate hikes in the course of a year, and what that's doing to the overall bond market and what it's going to do to the economy, and whether inflation is sticky. So those are all the things. Bottom line is, what up, it's here's a chart of the SPY. So yesterday was an interesting day. Sometimes they do that right before the Fed. They like to shake the tree. They like to search for stops. They like to steal your stock if you happen to be long multiple things. Maybe trap some shorts. And that's kind of what they did yesterday. So for today, at least we have a new point of reference. Okay, what up, Kansas City? How you doing? Yesterday the SPYs hit a low of 407.82. So this is your range for today. And sometimes, on Fed Day they like to explore both ends of the range, and you should only be playing extremes if you do that. So I would write down for the SPYs 407.82. That is yesterday's low. And then below that is the low of last week, which is 403.78. And then you have 414.82. Okay, and then you have 417.61, which is Monday's high. So this is your range, right? Here is your range. And today I would not get involved in no man's land. Meaning, if you start buying too early, they can stop you out, and if you start shorting too early, they could stop you out. So you want to play the compelling areas. Otherwise, you don't want to do much at all in there. So here is the SPYs, and this is your range. Okay, what's going to dictate which way we go in that range? Well, here's basically some of my smart guys, what they're saying. This is what the computers are programmed to look at. So it's basically saying, the base case assumes this line is qualified or caveated. Okay, something along the lines of could be appropriate or may yet be appropriate. If that changes, or if the Fed wanted to send a hawkish message, there would be no modification at all, while a dovish surprise would involve moving it entirely. So it's all about this. Take a little snapshot. How do they change the language? Do they go 25 basis points and change the language? Do they go 25 basis points and not change the language? Or do they go 25 basis points and take that sentence out? So If they, take the sentence out, that would probably be, very dovish, and then the market would probably try and test 414.82, 417.61. If they leave the language exactly the same, where it means like maybe in June there's gonna be more raises, chances are they might, look at 407.82 or 403.78. Then you go to the weekly chart, it's interesting because we're in the exact same spot we've been at in a long time. We were in this spot in what is this, April 25th, 2022. We were also in the same spot, June 21st, 2021. So we've been in, besides this overthrow and this head and shoulders top that gave us a move down to the inverse head and shoulders pattern. Bottom line is we've been, squeezing out the excess in the past 2 years of free money for 12 years and the checks. So in order to get to 431, which is what some people are saying could happen because of better than feared earnings season, okay, and perhaps a dovish pause, inflection point, it's going to have to get above 417.60, 418.31, 427. So now you could write down these 4 pivots because those are important. If you think that they're going to keep raising rates, that more regional banks are going to go to zero, and that all of a sudden, bad news is going to be bad news, and the recession talk's going to get louder, and all of these major smart guys are going to be right that in the second half of the year, economy is going to fall off a cliff. Chances are we're going to get below this pivot and 33.80 and get down to here. And I would say the only way, I think, in my humble opinion, that the Fed is going to cut rates, because there's still a lot of talk about cutting rates, is if the market heads back down towards the lower area. Like, why would the Fed cut rates if all of a sudden we're continuing to grind up like we've been grinding up? So again, there's multiple things to consider. There's multiple time frames to consider. But the bottom line is, on May 3rd, Wednesday, Fed Day, you trade actively for a living. You're competing against the computers. You're competing against other traders. You need to have your levels and know what the market's looking for. And then tomorrow, sometimes you do the opposite. And then you have Apple on Thursday also. So there's a whole lot of things going on here. So anyway, so I would just, again, know your areas of the range and just make sure you're, you know what the market's looking to hear or not. You could have a dovish type 2 o'clock release, and then at 2:30, when Powell's speaking, he could talk very hawkishly by saying, higher for longer, et cetera, et cetera, et cetera. And then all of a sudden, market rallies from 2 o'clock, and then at 2:30 gets hit. So you have to be very flexible. The Qs are very important. Qs also, in tech, made weekly highs. This cup and handle pattern is still intact. At this point now, you also have a range. What I would write down is 317.61. If the Qs don't go below 317.61, you can't get too bearish. So that's a good way to just say it. 317.61 is yesterday's low. The 21 days 315. Then you have 321, and then you have Monday's high at 323. So these are different levels. Pivot resistance, big resistance, pivot support, bigger support, and then that's where we were last week. So those are what you write down. And then when you look for leading indicators on, sometimes something's really strong or really weak prior to the Fed, so then you could at least see what happens when the futures go up and down erratically after the Fed. You look to see, is it affecting the stock that's strong on the day or not? Some of the recent strength in tech has been obviously Microsoft. Microsoft's been really good to us post earnings, or into earnings, but now you have a little inside range. 303.91 can't get too bearish. If this were to break, if this range starts to break to the downside, then I would tell you, tech is really getting weaker. If it hangs in here and all of a sudden starts to try and get above 308.93, then you know that well, can't be too bearish if all of a sudden Microsoft's making higher highs on the week. But there's not a lot of stocks like that. Meta also, has been pretty good. You had the big gap up, gave you a move to 244.92 yesterday, above 244 before coming in. It's still above this big earnings gap, so you can watch Meta for some clues. Apple has numbers on Thursday. We'll see if it continues to hold up here. It's still above the 8-day, right down 167.54. If Apple holds 167.54, you can't get too bearish. And then here's 170.45, still hovering above this big downtrend. And you look at the weekly chart, there's been no bear market in Apple, and a lot of things look a lot worse than this. So This will be also very important, and this comes out on Thursday. So we'll see how that goes. Um, yeah, I think Apple Savings Account. Listen, here's my here are you guys on my iPhone. You know, everyone's iPhone is like their life. You know, I'm just saying it's your new computer, it's your credit card, it's your social media, it's your phone, it's your pictures, it's everything. You know, but the chances are, like me, I've had this iPhone now, I think for 2 years. I haven't been in a rush to upgrade it. You know, after spending $1,800 on this one. So it's just a question of, you know, what are they going to focus on the earnings? They're going to focus on the service business. They're going to focus on the iPhone. They're going to focus on, you know, who knows? The reaction will be key, and we'll see. You know, some people are like, well, what about AMD today? You know, we don't take stock into earnings, which is good because you never know. At this point, we'll see. You know what happens here. 83.76 is a decent level for AMD. Does this hold or break? This has been in a corrective mode pretty much since the 101 high. Where is AMD right now? AMD is, let's see, before I saw it was down 6, right? AMD is, it's down, yeah, what is that? That is, oops. AMD is at 82.93. So I think it'll be important. What's this low here? This low, hold on. This low is 83.77. So I think it's pretty important. Does AMD put a low in at 83 and close at 85 or 86, or does it put a low in at 83 and then trend down all day? You know, AMD's been a pretty important stock. Obviously, NVIDIA has been more important. You know, NVIDIA gave you a, you know, we had a really good trade in NVIDIA from what's it called? From Friday, and then it broke through 281 to 290 on Monday. Then yesterday, I was pretty tight. They stopped me out of it. Plus, I also knew that AMD was coming, and I don't like to be long things that could be affected by something else. So we'll see what happens with NVIDIA today. NVIDIA is probably down with AMD. NVIDIA is, even though they haven't really been trading much together, NVIDIA is at 278.89. So this low here yesterday was what? 280. This low here is 277. So I think this will be pretty important also. Does AMD does NVIDIA kind of just ignore the weakness? And is this a great opportunity for NVIDIA to go right to green? Or does NVIDIA open down 3-4 points and go down 7 or 8? So that helps with tech sentiment also. You know, the guys like Redler, what about the what about the regional banks? Well, they are a problem, aren't they? They never really bounced. Okay, don't be in the regional banks as an investor. We did really well having puts on a Signature Bank, and I had puts on First Republic, FRC, and now I had puts on MCB. And people are like, do you know what's happening? Are you friends with these banks? I'm like, I have no freaking clue. All I know is not much of a bounce. I saw this breaking here, so I bought some 25 and 22.5 puts. We went over this yesterday. Got paid really well on them. You know, right now the SPYs are up $1, so it doesn't really care. At this point, you're still seeing, you know, I think some people are like, oh, it was an acute situation just for the 3 biggest. Well, there's 4,700 regional banks, so the best ones, you know, are viewed as worthless, meaning, you know, the J.P. Morgan can buy their great, awesome assets for 17 cents, and then the government gets the bad portion of the bank, and then the equity owners get a 0. Who the hell needs to be in regional banks? And you know, I was there during the financial crisis, just saying when they said, oh, subprime, prime is prime, and then prime had to buy subprime, and then prime got watered down, and it created a lot of problems. I'm not saying this environment's like that. I'm just saying you can't ignore what's happening here in this situation. You could ignore it for a little while until the market doesn't want to ignore it. But at this point, people are like, when are we going to get this huge corrective phase? I'm like, well, we got to stay below the 21-day first. And so far in the SPYs, you're only able to stay below for 2 days before popping back up. So I think the next 2 days are going to be pretty important. You know, we'll see. The regionals could be giving the Fed a warning. Some people say, hey, now look at the regional banks. The Fed has to be done. They can't do this anymore. Okay, so maybe that gets us closer to this dovish inflection point, which then the market reacts positively. And if that's the case, then it'll get above 414 and 417, and it'll be led by, you know, by tech probably. JP Morgan, they filled the gap. I was like, let's watch this gap here. If it's going to hold here, you can't get too bearish. If it's going to fill this gap, then it gets choppier. And JP Morgan, some guys made good money shorting JP Morgan into that gap. Hey, what's up, Salam? How you doing? So anyway, it's 6:46. It's Fed Day. Probably have an inside type action leading into the 2 o'clock release. 2 o'clock release. Wait to see what that statement is. If it could sound very dovish, and we could rally a little bit off of it, and then at 2:30 he could sound very hawkish by saying we're gonna stay the course until 2024, 2025, and the market might not like it. So no back and forth. So just know today's not the easiest. I don't love Fed Day. There's so many different moves. We'll look at some key indicators. We'll try and figure it out. And again, the real key to this whole thing is your asset allocation over time. Okay, having a long-term and intermediate plan on all types of market sectors and cycles. Sometimes we're in a range like we've been in for 2 years, and you're getting a good cost average in your 401k and your 403b, and then we make new highs and we go. Sometimes you're in a corrective phase where it's fast and furious to the downside. Trading is volatile and great, and then I could put my blood in the street account to work, which I did 3 times the last 5 years and made good money, and that's now sitting in a fixed rider. So you got to know how to react and how to approach, and have multiple ways to do it. An active account, a swing account, an option account, a box account, a 401k, a 403b, a 529, and a blood in the street account. You have all those, and a whole life insurance policy that I've had for 15 years. Thank God my best friend talked me into that, even though it wasn't easy to put $1,400 away a month since age 35. And once you start doing that, you then change up your monthly nut and you'll be fine. If all of a sudden I didn't have that, I'd be spending it somewhere else, I'm sure. But anyway, so plan. They say first you make your plan and then you work your plan, and then your plan makes you. So we'll see how it goes. Good luck today, guys.